Welcome to Explain the Charts, where we break down the news and chart data to make trading simple and understandable. Today is September 10th, 2024, and we're diving into the S&P 500, represented by the SPY ticker symbol. Recent news headlines are showing a mixed picture for SPY. While the market saw a rebound on September 9th, with the Dow Jones and S&P 500 gaining over 1%, investors remain cautious due to the looming inflation report for August, to be released on Wednesday. The report is expected to be crucial in determining the Federal Reserve's decision on interest rate cuts, which is anticipated on September 17th. However, concerns about a potential recession persist, leading to volatility in the markets. Analysts are closely watching for signs of weakening inflation, which could further support a rate cut. A weaker-than-expected CPI reading might signal that the Fed is nearing its goal of tamping down inflation. The inverted yield curve, which often suggests an impending recession, has recently uninverted, potentially indicating less concern about a downturn. The tech sector performed well on September 9th, with notable gains in shares of Nvidia, Amazon, and Microsoft. Apple's stock was relatively flat following the launch of its new iPhone 16 models. Overall, the news suggests a market in a state of flux, waiting for the inflation data release to provide clearer direction. Let's take a look at the charts and see if they can provide any further insights. Let's start with the daily chart of SPY. Zooming out to the full time frame, we see a long-term uptrend in SPY, but it's clear that the market has been experiencing a correction in recent months. There's been a noticeable pullback from the all-time highs set earlier this year. However, we can identify a crucial support level around 450, which has been tested and held multiple times in the past. If SPY dips below this level, it could signal a deeper correction or even a potential shift in the long-term trend. On the other hand, a strong bounce back from this support level could indicate the continuation of the uptrend. Let's now switch to the hourly chart to get a closer look at the recent price action. The hourly chart reveals a more volatile picture, with SPY bouncing back and forth around the 550 level. We can see that SPY has struggled to break through the 560 resistance level. This level is also a significant psychological barrier for traders. A sustained break above 560 would likely trigger further upside momentum. On the other hand, if SPY fails to break above 560 and instead drops back below 550, it could indicate a short-term bearish trend. It's crucial to consider the inflation report, scheduled for release on Wednesday. If the report comes in weaker than expected, it could support a rate cut, potentially pushing SPY higher. Conversely, a stronger-than-expected report could lead to uncertainty and potentially push SPY lower. The hourly chart also provides insights into the current sentiment in the market. The volatility suggests that traders are still trying to gauge the direction of SPY, and the recent rebound may not be entirely indicative of a bullish trend. Let's narrow our focus to the 15-minute chart to see the most recent price fluctuations. The 15-minute chart shows a more choppy trading session, with SPY bouncing between support and resistance levels around 545 and 547. We can observe a couple of bearish candlesticks, suggesting a potential short-term bearish trend. However, the volume has been relatively low, which might suggest a lack of conviction in the selling pressure. If SPY breaks below the 545 support level, it could signal a stronger bearish trend. However, a strong bounce back from this support level could indicate that the buyers are still in control. The short-term trend in the 15-minute chart seems to be influenced by the news and market sentiment. The upcoming inflation report could trigger a significant move in SPY, either up or down. Keep an eye on the price action in the 15-minute chart, especially around the support and resistance levels. This chart can provide valuable insights into the short-term trading opportunities. Looking at the daily chart, the 450 level is a key support level to watch for. A sustained break below this level could signal a deeper correction and potentially a shift in the long-term trend. Shifting back to the hourly chart, the 560 level represents a significant resistance level. If SPY breaks above this level, it could trigger further upside momentum. However, A failure to break above 560 and a subsequent dip below 550 could indicate a short-term bearish trend. The upcoming inflation report release on Wednesday will be a critical factor in the direction of SPY. Finally, the 15-minute chart offers the most granular view of the price action. The support level around 545 and the resistance level around 547 are crucial areas to watch for short-term trading opportunities. If SPY breaks below 545, it could indicate a stronger bearish trend, but a bounce back from this level could suggest that the buyers are still in control. Remember, the short-term trend is highly influenced by the news and market sentiment. In summary, SPY is currently in a state of uncertainty, with the upcoming inflation report being a key driver of market sentiment. The daily chart shows a long-term uptrend, but a sustained break below the 450 support level could signal a deeper correction. The hourly chart suggests a battle between bulls and bears, with the 560 resistance level being a crucial area to watch. A break above this level could trigger further upside momentum, while a failure to break above and a drop below 550 could indicate a short-term bearish trend. The 15-minute chart offers short-term trading opportunities, with the 545 support and 547 resistance levels being key areas to monitor. Remember, the short-term trend is highly volatile and influenced by news and market sentiment. Keep an eye on these key levels, the inflation report, and overall market sentiment to make informed trading decisions.